Welcome back to XRP Insider, the channel where we bring you the biggest XRP updates, the hottest Ripple developments, and the market-moving stories shaping the future of crypto finance. Today's XRP update is one of the most important discussions we've had in weeks because Ripple is once again at the center of institutional adoption, banking integration, ETF momentum, and massive whale accumulation. Right now, XRP is trading around the $1.41 to $1.42 range. And despite recent market volatility across the crypto sector, XRP continues showing serious resilience as it consolidates near what many analysts are calling a major breakout zone. Investors are watching closely because the pressure building on the charts has now been forming for nearly 3 months. And historically, XRP tends to make explosive moves after long periods of compression like this. At the same time, institutions are quietly increasing exposure, regulators are finally offering clarity, and the entire narrative surrounding Ripple has completely shifted compared to the uncertainty we saw during the SEC lawsuit years. The mood around XRP today is very different, and many long-term holders believe this could be the beginning of a major transition phase for Ripple and the XRP Ledger ecosystem. One of the biggest stories driving market excitement right now is the recent institutional exposure involving UBS. Reports circulating throughout the crypto market indicate that UBS disclosed exposure to Ripple in a new SEC filing, and this immediately triggered renewed bullish sentiment around XRP. Whenever one of the world's largest financial institutions appears connected to Ripple in any capacity, investors pay attention because it strengthens the idea that XRP is becoming part of the larger institutional financial infrastructure. We have to remember that for years, critics claimed banks would never seriously integrate Ripple technology at scale, but now the conversation looks completely different. The market reaction following this disclosure showed how sensitive XRP is to institutional validation. Even during periods where retail sentiment appears uncertain, one strong signal from a major banking institution can completely shift momentum. Traders noticed increased volume almost immediately after the news spread, and analysts began discussing the possibility that institutional adoption is accelerating faster than many expected. What makes this even more interesting is that XRP continues maintaining stability despite broader market fluctuations, suggesting there may be strong support from long-term holders and larger investors who are positioning themselves before the next major move higher. At the same time, another headline has absolutely shocked the crypto industry because Ripple has reportedly completed a historic settlement on the XRP Ledger in collaboration with JPMorgan Chase and Mastercard. According to reports, this integration brings XRPL technology directly into live institutional banking environments for cross-border tokenized treasury settlements. If these developments continue expanding, this could represent one of the most significant milestones in Ripple's history. For years, Ripple executives talked about transforming global payments and making cross-border transfers more efficient. But many investors wanted to see real institutional implementation before fully believing the vision. Now, the possibility that major financial giants are actively working with XRPL technology changes the entire conversation. This is no longer just about speculation or theoretical use cases. The market is beginning to see practical applications involving real financial infrastructure. That is exactly why many XRP supporters believe the asset remains massively undervalued compared to its long-term potential. When institutions start integrating blockchain systems into real-world settlement operations, it creates an entirely different level of legitimacy for the underlying ecosystem. Investors are watching carefully because partnerships of this scale could eventually increase transaction demand across the XRP ledger significantly. Another major factor fueling optimism is the extraordinary whale accumulation happening behind the scenes. Data shows that wallets holding more than 1 million XRP accumulated over 1.2 billion additional tokens during the first quarter of 2026. That is a massive amount of XRP moving into large investor wallets, while the price remained relatively suppressed compared to previous cycle expectations. Historically, whale accumulation phases often occur before major market expansions because larger investors tend to position themselves early while retail sentiment is still uncertain. Many analysts now believe this accumulation trend is one of the strongest bullish signals currently visible on-chain. It suggests that high net worth investors and institutional participants may expect significant upside ahead. Even more interesting is the fact that this accumulation happened despite months of sideways price movement. Normally, weaker hands become impatient during consolidation periods, but whales appear to be using this range as an opportunity to continue building positions quietly. This behavior has created growing speculation that smart money may already anticipate future catalysts connected to ETF inflows, regulatory clarity, and broader institutional adoption. Some traders are now comparing the current XRP market structure to previous periods where extended consolidation eventually led to sudden explosive breakouts that caught much of the market off guard. Speaking of ETF momentum, this has become one of the strongest narratives supporting XRP in 2026. Since XRP officially received commodity classification earlier this year, cumulative Spot XRP ETF inflows have reportedly reached approximately $1.44 billion. That number is incredibly important because ETF products create direct institutional exposure pathways for investors who previously avoided crypto due to regulatory uncertainty or custody concerns. We already saw how Bitcoin ETFs transformed market participation and institutional involvement, and now investors are beginning to speculate whether XRP could experience a similar wave of demand growth over time. ETF inflows matter because they represent sustained capital entering the ecosystem through regulated investment products. This is not just short-term retail speculation driven by hype on social media. These inflows often involve pension funds, wealth managers, institutional clients, and larger investment firms seeking diversified digital asset exposure. Many analysts believe ETF adoption could become one of the primary drivers behind XRP price appreciation during the next phase of the market cycle. If inflows continue accelerating while available supply remains constrained due to whale accumulation and long-term holding behavior, it could create powerful upward pressure on price over time. This is exactly why so many traders remain focused on every ETF-related development connected to XRP right now. Of course, one of the biggest reasons sentiment around Ripple has improved dramatically is the conclusion of the long-running SEC lawsuit. After years of legal battles, uncertainty, fear, and market manipulation narratives, the case has officially ended, and many investors view this as one of the most important turning points in XRP history. For a long time, the SEC lawsuit acted like a cloud hanging over Ripple and XRP because institutions were hesitant to fully engage while the regulatory outcome remained uncertain. But now that the legal battle is behind them, Ripple has significantly more freedom to expand partnerships, institutional integrations, and banking relationships. Investors who stayed loyal throughout the lawsuit years now feel validated because the market narrative surrounding XRP has fundamentally changed. Instead of discussing survival, the conversation has shifted toward expansion, adoption, and institutional growth. Analysts believe this clarity removes one of the largest barriers that previously limited XRP's market performance compared to other major crypto assets. The psychological impact of this victory should not be underestimated either, because confidence plays a huge role in financial markets. Many traders who avoided XRP during the lawsuit years are now reconsidering exposure as the ecosystem enters what supporters believe could be an entirely new era of legitimacy and institutional acceptance. Another key development attracting attention is the upcoming Clarity Act, which market participants believe could establish a more definitive legal framework for digital assets in the United States. Investors across the crypto industry are watching this legislation very closely, because regulatory uncertainty has been one of the biggest obstacles preventing broader institutional adoption for years. If the Clarity Act delivers comprehensive guidance for digital asset classification, compliance, and operational standards, it could create a significantly more favorable environment for companies like Ripple. Many XRP holders believe this legislation could become a massive catalyst because Ripple already spent years navigating legal scrutiny and building regulatory relationships. Compared to many smaller crypto projects that still face uncertainty, Ripple may actually be positioned advantageously if stricter regulatory standards emerge. Markets tend to reward clarity because institutions prefer operating within predictable legal frameworks. That is why every update connected to this legislation immediately attracts strong attention from traders and analysts alike. Some experts believe the combination of ETF adoption, banking integration, and regulatory clarity could collectively create one of the strongest institutional growth narratives in the entire crypto market. If that happens, XRP may continue attracting capital from investors looking for assets with both utility and regulatory legitimacy. Ripple's banking ambitions also continue expanding rapidly, following reports that the company received conditional approval for a U.S. National Trust Bank charter from the OCC back in late 2025, which reportedly became fully operational in April 2026. This is a major milestone because it allows Ripple to provide digital asset custody services within the regulated U.S. banking system. For many investors, this development represents another sign that Ripple is positioning itself not merely as a crypto company, but as a serious player within the evolving financial infrastructure of the future. Custody services are incredibly important for institutional adoption because large investors require secure and regulated environments for holding digital assets. By operating within the regulated banking framework, Ripple may gain significant credibility among institutions that were previously hesitant about crypto custody solutions. Analysts believe this banking expansion could eventually strengthen Ripple's competitive position compared to other blockchain companies that still lack similar regulatory infrastructure. The more deeply Ripple integrates itself into regulated financial systems, the stronger its long-term institutional case becomes. This is one reason many XRP supporters remain extremely optimistic, even during periods where price action appears relatively slow, because they believe Ripple is quietly building foundational infrastructure that could support enormous growth later. Now let's talk about the current price structure, because this is where things become especially interesting for traders. XRP has essentially been coiling within a tight range for nearly 3 months, and many technical analysts believe this consolidation phase is approaching a critical decision point. The market continues hovering around the $41 to $42 region, but traders are paying close attention to the $50 resistance level because many believe a clean daily close above that zone could trigger a breakout toward $70 relatively quickly. Compression patterns like this often build significant momentum over time because buyers and sellers continue battling within narrowing ranges until one side finally takes control. If bullish momentum accelerates alongside positive institutional headlines, ETF inflows, and broader crypto market strength, XRP could experience a sudden expansion move that surprises many short-term traders. On the other hand, analysts also caution that markets remain volatile, and temporary pullbacks are always possible, even during bullish conditions. That is why risk management remains essential, regardless of long-term optimism. Still, the overall structure continues attracting bullish attention because XRP has managed to maintain stability despite broader market uncertainty, which many analysts interpret as a sign of underlying strength rather than weakness. Short-term forecasts for May 2026 currently place XRP within an expected trading range between $1.40 and $1.60, according to many market analysts. What makes this especially important is that XRP has repeatedly defended support zones despite periods of negative sentiment and macroeconomic uncertainty affecting broader markets. Stability near key breakout levels often increases trader confidence because it suggests buyers remain active during dips. Many investors now believe the next major catalyst could push XRP beyond this consolidation phase entirely. Some traders are watching Bitcoin closely because overall crypto market momentum still influences altcoin performance significantly, while others believe XRP-specific developments may now be strong enough to drive independent price action. That possibility alone has generated enormous excitement among long-term holders who waited years for Ripple's institutional narrative to fully mature. If XRP successfully breaks above major resistance levels with strong volume confirmation, momentum traders could quickly enter the market, accelerating volatility to the upside. That is why so many analysts are focused on the next several weeks, because they may determine whether XRP remains range-bound temporarily or finally enters a stronger bullish expansion phase after months of sideways consolidation. Long-term predictions for XRP continue generating huge debate throughout the crypto community because estimates vary dramatically depending on future adoption scenarios. Some bullish forecasts now place XRP between $2.80 and $8 by the end of 2026 if ETF inflows continue increasing and the Clarity Act delivers strong regulatory support. While these predictions remain speculative, they reflect growing confidence that Ripple's ecosystem may finally be entering the mainstream financial world in a much larger way. Supporters argue that XRP's utility within cross-border payments, tokenized assets, institutional settlements, and banking integrations creates stronger long-term fundamentals than many purely speculative cryptocurrencies. Skeptics still argue that competition remains intense and that execution risks could slow adoption. But even critics acknowledge that Ripple's position today looks dramatically stronger than it did several years ago during the height of the SEC lawsuit uncertainty. Investors are now trying to determine whether current prices represent an early-stage opportunity before broader institutional participation accelerates further. This debate is likely to intensify throughout the remainder of 2026 as more adoption metrics, ETF data, and regulatory developments continue emerging across the market. Another reason XRP remains one of the most discussed assets in crypto is because its community continues showing extraordinary resilience. Even during difficult years filled with lawsuits, exchange delistings, and uncertainty, XRP holders remained incredibly loyal to the ecosystem. Now that many of those obstacles appear resolved, the community feels re-energized by the possibility that Ripple's long-promised institutional strategy is finally unfolding at scale. Social media activity surrounding XRP has increased substantially over recent months as investors discuss ETF growth, whale accumulation, banking integrations, and potential price targets. The emotional aspect of this story matters because markets are influenced heavily by sentiment and belief. XRP supporters often describe the current environment as validation after years of criticism from skeptics who believed Ripple would fail under regulatory pressure. Whether or not every bullish prediction becomes reality, there is no denying that Ripple has survived one of the most difficult regulatory battles in crypto history and emerged with significantly stronger institutional positioning than many expected. That alone explains why investor confidence appears to be rising steadily again throughout the XRP community. At the same time, analysts continue reminding investors that crypto markets remain highly volatile and unpredictable. Even assets with strong fundamentals can experience sharp corrections, especially during periods of macroeconomic uncertainty or broader market weakness. While institutional adoption, ETF inflows, and regulatory clarity all support bullish narratives, traders must still approach the market carefully and avoid emotional decision-making. XRP has historically experienced large price swings, and volatility remains part of the crypto market environment. Many professional analysts recommend focusing on long-term trends rather than reacting emotionally to short-term price fluctuations. The current market structure appears promising to many traders, but confirmation through sustained breakout momentum will still be important before declaring a major bull run fully underway. This balanced perspective is important because excitement around institutional developments can sometimes create unrealistic expectations in the short term. Experienced investors understand that markets rarely move in straight lines, even during strong bullish cycles. Still, the combination of legal clarity, institutional exposure, and banking expansion gives XRP one of the strongest fundamental narratives it has had in years. One particularly fascinating aspect of Ripple's strategy is how closely the company continues aligning itself with traditional financial systems, rather than positioning itself completely outside them. Unlike some crypto projects that focus purely on decentralization narratives, Ripple has consistently pursued partnerships with banks, payment providers, regulators, and institutional players. That strategy attracted criticism from certain parts of the crypto community in earlier years, but today it may actually be becoming one of Ripple's greatest strengths. As governments and institutions seek regulated blockchain solutions, Ripple's willingness to work within existing financial structures could help accelerate mainstream adoption. Investors are beginning to realize that the future of digital assets may involve collaboration between blockchain technology and traditional finance, rather than complete disruption overnight. Ripple appears to be betting heavily on that outcome, and recent developments involving institutional settlements, custody services, and banking approvals suggest the strategy may finally be paying off in a major way. As we move deeper into 2026, the next few months could become absolutely critical for XRP's future trajectory. Traders are watching price resistance levels carefully, institutions are monitoring regulatory developments, and investors across the market are evaluating whether Ripple's growing institutional footprint can translate into sustained demand growth for XRP itself. If ETF inflows continue accelerating while regulatory clarity improves further, many analysts believe XRP could attract a completely new wave of institutional capital. Combined with ongoing whale accumulation and expanding banking integrations, the setup has created one of the most closely watched situations in the crypto market right now. Whether XRP breaks out immediately or continues consolidating temporarily, it is clear that the narrative surrounding Ripple has evolved dramatically compared to previous years. The market is no longer focused primarily on legal survival. Instead, attention has shifted toward institutional adoption, banking infrastructure, and long-term utility within global finance. So right now, the big question facing investors is whether XRP is simply preparing for another temporary move higher, or whether the market is witnessing the early stages of a much larger institutional expansion cycle. That is the question dominating conversations throughout the crypto world today. Between the end of the SEC lawsuit, massive ETF inflows, major whale accumulation, banking charter approvals, and reports involving financial giants like UBS, JPMorgan and Mastercard, XRP suddenly finds itself at the center of some of the biggest institutional narratives in digital assets. The coming weeks may reveal whether this consolidation phase finally leads to a powerful breakout above major resistance levels, or whether the market needs more time before the next major move begins. Either way, XRP remains one of the most important cryptocurrencies to watch in 2026, and the developments unfolding right now could shape Ripple's future for years to come.